Good morning, Paul Georgie from Allendale. It's July 30th, 2010. Well, the U.S. Released their second quarter GDP here this morning. That's having some effect on the outside markets, as we call them. Dollar is unchanged, however. Crude oil is down 136. Stock markets are down sharply. The GDP number basically came out neutral, which leading up to this report, there was a good rally in the stock market. Now we're seeing some profit taking after the report. The question is where we end up today, as we could see some recovery here after this initial reaction or profit taking move. In the grain markets, higher again this morning. It looks like we're going to be higher across the board here, unless this news out of the economic sector impacts traders' attitudes. But we still got the same problems. Russia, dry, hot, extreme heat over there. Corn, soybeans, sugar beets, late wheat is affected by this drought and extreme heat, and will probably curtail their any kind of growth or maturity on their crops. The big talk here this morning is about export sales. Are they going to export? Ukraine has made some adjustments in their exports and quality concerns. Traders feel like, hey, that's a indication that they're getting ready to cut back on exports out of the Ukraine. So those factors are still causing wheat prices to be sharply higher. European wheat prices were higher this morning, making new highs on their close. And that's carrying over into our futures contracts here today. The big question is, how much more of a rally can we get out of the corn and soybeans? I was just out in Iowa, or Council Bluffs, Iowa, and Omaha yesterday, and the crops look fantastic. I don't think there's any doubt that we're going to have a big crop here in the U.S., but we are a world market, and we're looking at the whole world situation, and that is going to have an impact on our balance sheets. When you look at the total usage versus demand, we really can't have a hiccup in supply, because the demand is there for corn, and it's going to have to be balanced out. And we're the only store in town, basically, for the world buyer to come and get our corn. So demand affects us for a while, and when we run out of the support and the demand stories in corn and soybeans, we're probably going to see a sell-off, because the supplies appear to be large when it comes to production. We still are concerned about which side of 163 is the yield going to be on corn. We believe it's going to be to the upside. Our models that we run right now, based on the crop conditions, suggest a 167 yield. So those are things that are going to be played out here. We've got the emotion right now. We expect coming into Friday here that we could see some correction in these markets, with the outside markets correcting here today. Don't be surprised if we get a bit of a sell-off, some profit taking, but the overall picture is still friendly. It's still hot and still dry in Russia. In the Midwest, we're going to be okay. However, there is some heat building in the southeast United States, which is going to impact or stress some crops. So we've got some concerns here in the U.S. Nothing major. We still look like we're going to have a tremendous crop. So we got the supply-demand tug-of-war. Right now we're concerned about supply other places around the world, which helps our demand. Over in the livestock trade, the dominoes started falling there yesterday when we seen cash cattle trading at $93 in the south, $147 in the north. That has caused some pressure in these cattle market, and then we had cutout values reported lower yesterday afternoon. Futures sold off, so we're going to probably see some further downside pressure in this cattle trade, especially with the stock market being down here this morning. We're looking at the August contract of cattle, $91 is key support. If we close below $91 here today, that will probably accelerate the downside, simply because we're taking out this long-term uptrend line that we've had for several months. So that is something to watch for in the cattle. In the hogs, we've got a gap below the market from yesterday's sharp rally. Cash markets are firm. Packers are having to bid for cattle, and that are bid for hogs because of the tight supplies, and that is a positive there. And it's also hogs will be much more affected by the problems in Russia than cattle, because if Russia their goal is to keep the protein levels high for their people, is what they've said many times. That means they need to buy meat. Poultry probably would be the logical purchase, which helps reduces the competition of meat here in the U.S. and gives pork an advantage. So things to watch for there. Some of the technical areas, as I said, in the cattle, $91 in the August. In the hogs, we've got resistance at $84.90, and then again at $85.65, support at $81.80. I might also say in the corn, the technical resistance there is going to be this $4 area. If we could close corn, decent corn above $4, I think you're going to have some more technical buying kick in here toward the end of the day. So if you got any questions, give us a call. A lot of stuff going on at 800-262-7538. We wish everybody a very successful trading day. We'll talk to you Monday morning. Thank you.